Crypto friends, it's the Crypto Sniper. Yes, quick update for you. Yep, what's gone on? What's gone on? Well, as you saw, there was something interesting that went on with Bitcoin. Yes, it bulked at that all-time high. In fact, let's just have a super quick segment of when we last spoke to you with regards to Bitcoin and our expectations right here. So looking good. And as I say, we're looking for 67281 and then possibly reduce a little bit of the leverage, Keep the investment. So keep the investment, reduce a little bit of a leverage on the running of the 67281, potential to go off. 3 scenarios that might happen. Reminder of what those 3 scenarios we expect to be with a higher probability. Look for the words of higher probability of a reaction, a more sizable reaction than you've faced recently. We're long. Remember the big long video form. We're not changing, but take a little bit of the leverage, off, take a little bit off. It could, of course, entirely go moon stratospheric, as it sometimes does, and just do a blast rate right through. So it doesn't mean that it has to have a pullback. Don't go and put in the comments, so you're calling a pullback. We don't know. We're just saying the possibility could be a little higher, given that you're approaching the legacy high. You would either... 2 or 3 things that can happen. Run the legacy high, which is there, and then have quite a violent pullback. You could do, as happened here, and rarely does it do exactly like the previous time, but it can do, have quite a high vol run and then bulk at the target, not run the target, and have that fairly reasonable pullback period, having met the HVF target, but not run the new high. And you could just do, as I say, the absolute supermoon strong and just whale it up there for an extended period, and then later have a pullback and treat the 69 as support. That last one was the lowest probability of all. Why? Because our upward moves were getting shorter. You remember when we looked at the bigger time frame, we were getting a surge move, continuation pattern for 9 days, surge move, they were getting shorter. To suddenly have a supreme start expanding on the moves was bigger. So actually, funny enough, option 2, the failure to run the target and pullback was my priority one, but it had done it before. And we're sometimes a bit nervous about expecting the exact same. But that is, at the end of the day, kind of what ended up happening as we look at this. So let's go over to what actually happened. So there you go, creepity creep, and you bulked at the target by my reckoning. It depends which exchanges you're on, because literally the wick came within a millimeter or just made the legacy previous target. Now Binance has the legacy previous target in and around 69, and you've got a high of 69. So it touched it, it couldn't run it. Depending on which exchange you're on, it's going to be interesting to see. What was the high here? This one actually went beyond 69. I'm not sure what the final weeks ago target was. What was the final high here? 69. So on Bitstamp, actually, you are higher. So you did put a tick over it, literally a tick, but it's bulking at the target, which you haven't been able to make too much over. If you look at it here, we went 69,409. This is BitMEX. A lot of derivatives there. It gets super sexy and it was kind of violent. So that's probably the least significant one. So it seems generally, what was that? What's that Binance again? Bitfinex. Let's just switch the lights off. Did we run? It seems it's very close, either just touched, just through, or fail. 68,874, 68,958. Bitfinex is a failure to run the target. So literally you've come up to this level and then you've stood down. I think the most commonly used one is Binance. Look at all those alerts. Again, Binance, what did we get? 69 and 69, I think it was. It was kind of very much the same. So they are equal. So we bulked at the target in essence. And then we had on the shorter time frames, let's just drop down to that hourly, you had a 10 grand. Don't forget, 69, boom, traded 59. What was the low of that wick? A 10 grand wick. 59,005. So had you followed our advice and taken off at in and around the 67,218, which were around here, you would have avoided all the volatility and the drama. Thankfully, as a bull market, it has reflated back up. So if you didn't, and because it's still, in our opinion, early doors bull market, if you didn't take off, you've probably got almost as good. You're still not the 67,200, and you wouldn't have panicked if it got out. You wouldn't have panic sold into that, you would have actually bought back in on the much better prices and rode back up. So the value of that slight, take a little bit, you remember the crazy man with the bald head saying a little bit of the leverage off, take a little bit of the leverage off, keep investment. So you stay in investment. The investment goes for a ride. You put some of that leverage back on the rebound. Massive wick. Obviously, big overshoot. You ran that previous continuation. As I was highlighting before, you had smaller moves on the upside. We need our draw pen back. Smaller moves on the upside. Yeah, you see this is quite a substantial up move, and then this move over here a little bit less. So here we go. We get our draw pen back, and that is what we were highlighting. So again, let me just draw that. The big moves and then the slightly smaller move. You can see obviously continuation. There we go. You're getting a little bit softer. So if the move legs up are slowly showing smaller patterns, yeah. So this was around a 5-day one. Remember the one that was 9-day? You remember me showing you that last video? So the continuations are getting smaller. That was all this right the way back to history, even further in that direction. That was a 9-day. Continuation patterns getting smaller, the moves coming out of it getting smaller. So you're getting smaller fractals, smaller moves. That's how you go big into smaller setups. That means you are, as you're getting closer to the big original target objective and you're getting a little bit more accurate because you're getting closer there, you can get a little bit more. Okay, we can give you a tiny bit more. So, you know, you don't start with your best price. You say, I think we're getting there in terms of target. As you go in some of it, we still got some of the momentum. You leave it conservative, the first target. We're getting a little bit more. We're going to do this wind up. We can maybe go a little bit beyond. We're going there. Then you move a little bit closer to the target, but each time now it's scraping the bottom of the peanut butter jar, a little bit more incremental, smaller time frame. And now you've got to hop again, but it's a smaller move. You can get slowly more accurate on the eventual full target. As you get there, the moves are getting smaller. That tells you target run, or for this move, a bigger reaction now, and you reset and you rewind to go again. So you still should be investment long overall, in our opinion, not advice, and how we are putting it on. So it's always non-advisory. Slap in the face, 10 grander. That resets because it even took out those levels, those staircase levels that you had. Now you are having a new structure. Now you have to wait for this volatility to iron out, because first you absolutely threw it down by over 10 grand. Then you rallied back up by about 8 from around the 58, mid 58s to the mid 66s. Going even 67. So had you got out, you wouldn't have had the nerves on your leverage. You reduced your leverage. You would have been able to put some 25 or 50% back on the rally. Now do you want to put on? I think no, I don't think you're going to go straight up and run this level. So I think you're now going to re-expand into a longer continuation. That's going to give you a longer move, but now you have to twiddle your thumbs for a lot longer. So our suspicion, as always, is further continuation. However, if we start to put in inverted HVF structure and be very flat bottomed and do a lot of other things that we will help you learn as part of our program on that first link below, you will then see, boom, bosh, okay, this could be the first of a bit of a reversal. So maybe the all-time high will be a longer reversal. Generally, that's not our primary probability scenario. We think, and we continue to expect, as we early stages bull market, that continuation is the game. Good. Gold is running, by the way, my friends. This is very supportive as well. So overall, I think gold might get a bit more of the headlines now for a few days while Bitcoin sorts its feet out, by the way. So Bitcoin to sort its feet out. So that's narrative number one that we want to highlight. By the way, a super cool thank you before we take you to Ethereum and why we think Ethereum is going to start overperforming Bitcoin, to these people that just voluntarily posted comments in our last Ripple video. Self-study course is by far the best investment I've made. Thank you very much to you, kind sir. Without any prompting, he posted that. And also, as a new SC, that's Sniper Circle, by the way, that's our private portal. I can attest that this is well worth the financial time and commitment to learn HVF method. He's so awesome. He made such a good testimonial. I'm almost embarrassed reading it. You can read it for yourself. But a massive thank you to the guys from their own accord posting. Anyway, so while Bitcoin is here, and I expect it to a little bit gestate and a little bit come back off again now. So you've had the surge back up. We've got to shake out that cranky volatility that was the slap in the face as we approached and whether we say it just touched, just ran, or just fell short, we knew we were coming up to a key level of significance for which this would likely be a bit of action. And in terms of how we'd legged up, we expected a bit more of a reaction here than I did in the 2020 bull market. When we ran 2020, the 2019, 17 into 18, my apologies, the high of the 20K bull market, the previous one, before, where you just had a kind of little bit of a pullback on a candle of the big time frames and just ran it. So it does tend to work out at where you are. By the way, there were other things happening that we were discussing in the community that I didn't care to mention on these clips because I'm keeping them short, and of course all the detail isn't for everybody here. Was an interesting concept relating to, let's just go and put it in it, the USDT. That is the dominance of the largest tether. And we, of course, had been modeling that. You may recall at one point we weren't sure if the head and shoulders was going to work out. That is this going to be an upside and down or a downside structure? This little squeezy that you see over here that I freestyle drawn, over there, that was the slap in the face. That was the end of the upside largely trending. That was the whole bear market. That was just giving extra dominance into Tether. You failed to make a new high there. That set up our structure. Let's change color. That is a first structure in a new trend for which we expect overperformance. Yes, that's right. So you would have already been suspicious of a short there. We were watching it very, very closely, in fact, for which way it goes. And when we're wrong, we're 180 degrees wrong. So first we were saying, could you be continuation? Is this still a bear market? And the minute it started dipping here, this gave us our confidence to say bias bull. That is the HVF triggering event. You had a nice little pause for a rising wedge. You guessed it at our second interim, which also was very close to the first interim. So you had two serious levels that were pretty much there. That gave you a little bit of a rally. In fact, at one point, that wick was coming all the way back up there. But then it got smashed back down. Spiller, absolute thriller, the capitulation phase. Down, 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 down you go, and Tether is out of fashion. Out of fashion she goes. Small bounce on those key levels. I'm going to drop that at time frames. This is kind of important. The dominance was up at one point at 8.5. You've now gone it at 4. So that's a halvening of the dominance of Tether. So let's take it down to the 3 days. We were watching this. And the one thing that said to us, you may get a little bit of a reaction as you were coming up to the all-time high, amazingly, is that the Tether dominance was smashing through its target and had overrun its target. And it's likely of 5 stages of a breakout, which actually sees progress, decay, and pushback against the original direction of the trade once you've made target, absolutely kicked in. And I'll take it right down to the daily now that you know you are. You can see you've got a bit of a spike and you've got a bit of volatility. It was plain sailing out of these. Here you go. There was your wedge again. You saw you broke it. You had a little flat base. You did a descending triangle. Down, down, down. You came to our key levels of significance, key round numbers. Oh, look, coincidence. This guy's deluded. It's a placebo pill. Yes, indeed. Up you go. Up you go. Bounce, bounce, bounce. Break always key levels with momentum. Down, down, down. Break target with momentum. Fake rally. Down, you had a flat bottom there on a lower time frame. We were watching this. We weren't talking about it on YouTube. We were watching it, and then you get your reaction. So now it's not going to be as plain as sailing here for a short spell, which will dovetail a little bit with Bitcoin maybe coming a bit off again, but not so badly this time, and just shaking out all that cranky energy and calming down and getting a bit boring and making you all go to sleep and getting some of the people to say, oh, end of bull market, major fall potentially coming. Our expectation is this overperforms to the downside. It's a first inverted in a new trend. And on the Bitcoin side, we're in the early doors of a bull market where most of the alts are still languishing and still, barely all flows in terms of their relative position. We see a lot more. Could there be a demand destroying event midway the bull market possible? I don't think so. I think we're going to get the great run. And we also watch gold and silver, and I'll be doing an update actually on palladium in the markets, how even the whole broad strokes of precious metals are now going up. You will watch out for that one if you are subscribed to the Market Sniper. Anyway, so Tether, was also saying to us, this is a bull market. This is a bull market. However, you might start to get the beginning semblance of a little bit of pushback and reaction once you've run the target. Because it was also groovy and plain sailing, very small little continuation structure just before you pause to run the 5 and the 4.9%, which came from price behavior earlier that, as I say, we cover in our community at a much greater level. So that was the Tether. So why is ETH interesting? Why is ETH going to be a star? So overall, I need to remind everybody of our ETH dominance position, and there's some quite cranky potential outcomes, and I'm not endorsing and saying all of them, but there is technical structure, and it can invalidate later. But at the moment, there is technical structure for a number of things. So what's gone on, and this is a pretty busy chart. So let's just show you this. Just by Ethereum, and it was a much more mature market, but just coming in when they started capturing dominance was 30% once. It did indeed fall all the way down to no more than 7% of the total market cap. We called this and we said ETH will dominate for a while. That's a left shoulder, that was a right shoulder, and then we got ahead. People got very annoyed with us that it started to break, turned around, came back and did another smaller inverted head and shoulder there in the pink, and then broke a second time. Hey, it can happen. You can trigger and you can pull back. Did it ever run the stop? No, it didn't. That would have been set at that level. And then it smashed all the way up to the 20% that we said was a localized good point to take off as a result of patterns that these targets created. And there, sure enough, it was a great exit. And since then, you spend most of the time a bit like an iceberg, not like the ship with just a little bit of the keel in the water, an iceberg. Most of the ice is below the waterline of 20 and only small elements that are poking above the waterline. So had you got out at 20%, you would have sat at the better, not only the top quartile, the top 10% for the last, since 2021 April till today. And that is how Ethereum has been. He's made his 20% and he's been sub most of the time since. He's been a submarine. He's been the unseen part of the iceberg in terms of all of this. So that's ETH dominance. But the interesting thing that is coming out of this, and not many people seem to be talking about Ethereum anymore. I don't know if they aren't creating hype or pumpermentals or they're bottling it up to suddenly create. But you may have a complex left, which is called nestling head and shoulders, and an even greater head all the way here, and this serving here as a flat. So this was very spiker-mental, massive dip. The wick was super low here, by the way. This is much flatter but longer in duration, which is more typical of a bottoming right shoulder. So you want the volatility on the left shoulder, you want the length and the shallowness on the right shoulder for future upside. So in general, the calmness and the settlement of value is forming a base in and around the 15 and 20%. Instead of bouncing all the way down there, that was 9%, and all the way up there, that was 26%. I mean, that was a massive range in terms of dominance, and it happened in a very short time. So that could create this as a neckline at the 20% level. And the big question is, are we going to break this to the upside? We'll be dropping this down and I'll be answering the question as to why I think we will be breaking it to the upside, and if that is an inverted head and shoulder, why it could mean a massive move for in Ethereum's role in this overall crypto environment. 3810 ETH/USD, getting alerts popping as we speak. So let's go and have a look at it on a smaller time frame, shall we? So we drop down to the weekly, we'll boost that. So here's what I'm seeing. Ethereum was underperforming Bitcoin during the Bitcoin dominance phase. We expect that. And overall, most cryptos, with the exception of, say, Sol and one or two others, have also underperformed Bitcoin. Hence why Bitcoin has managed, despite being one of the largest market caps, to gain BTC dominance during this period. A lot of it has to do with the ETF in the news and being the primary coin, having the most liquidity, etc., etc. However, when people start talking about the applications and roles in this new digital slave system that they're going to be bouncing us into, well, then who's going to be involved in that? Where's your property going to be registered? Is it going to be registered on a Bitcoin blockchain, or is it more likely to end up being something that happens on ETH or one of the other tokens? I'm thinking more likely the application side of this is going to play out in Ethereum. So we've suddenly sparked up. A little bit of immediate slap down when you sparked up, but we sparked up again. Again, a slap down, but this time the rejection is coming in sooner. We are working our way up, and it's my expectation we will be breaking that 20%. That's right. It's my expectation we will be breaking that 20%, and that could be quite a substantial move. So were I just to do a sketchy draw, a super sketchy draw of what is possible, I had a lot of alerts for Ethereum, thank you, as you can tell. So we are watching, and our community is now well ensconced in it, and you're finding out about it a little bit later than everybody else, but no worries, no worries. It's better late than never. But you could have paid a lot less. We have also made the case for ETH Euro a couple of times. So I think we've actually given you quite good visibility on our opinion. That points to a 29.64. I would expect a 30% to fall. 30% dominance Ethereum. My goodness, that's a massive, massive call to make, especially when you're sitting at 18% now. You're sitting at 18% and actually dropped as low as 13, and this little area of low at 16. So going from 18 to 30% dominance. Don't forget, this is in an environment where plenty of other cryptos are going up. Bitcoin's not going to stop going up. I can see it doing that 145 potentially. That would be reasonably on. So Ethereum has to go ahead and make about 80. What's the difference? 18. Should we call it 19? And we go to 30. 11% on 19%. That's quite a lot. That's about 60-ish percent. Half of 19 would be about 10. It's about 60-ish percent. You have to go and do 60% more of everybody else who's gaining massively in a bull market. So that is going to point to real overperformance. And I would imagine the talk of the Ethereum ETF is suddenly going to get hot, and other reasons, any other reasons. And the role that Ethereum may well be playing could get hot. And as I've said before, this is totally in line with our expectations of coming down the market cap. Bitcoin, the liquidity, the institutions, it starts there. Bitcoin dominance, we were the ones that drew the orange box along the bottom. You remember that? How many times have I shown you that? Bitcoin dominance, first time, you're going to break out of this orange box and break to the upside. We gave that to you. We could see you going to 55%, and that's where you are right now. And that was at a time when Bitcoin's relative dominance was actually substantially low, in the low 40s. And that represented a huge overperformance from Bitcoin. And now we feel Ethereum's going to start getting that bid. Ethereum's going to start getting that bid. For the big money to come in, it's going to come in on ETH. That's right. So what happened? We also said to you when we were talking ETH, this is all on the dominance chart. We're getting all the alerts on something else at the moment. Let's get rid of our USDT dot dominance, and we'll get you up ETH Euro, which we drew for you some time ago. In fact, let's go here and get it. We've got a lot of ETH charts on the side, and you will see that that particular setup and structure did indeed make its target. Let's go. Maybe it's on Binance. Let's go there. So here we go. We had, and this is absolutely fascinating, guys. This is absolutely fascinating, and I mean, this is the magic of patterns. So I've shown you a couple of reasons why you might have got that slap in the face on crypto generally because of Bitcoin, and we discussed it in the previous video. Wind that leverage down before the big slap comes, as we showed you in the beginning of this clip. But also note the volatility as it played out as ETH Euro made its target. So you had the coincident moment of the slap in the face occurring just as Bitcoin was threatening its all-time high, and we suggested just on that alone you would get the largest first reaction because the moves up are getting smaller, the continuation patterns are getting smaller, you're squeezing ever little more out of an emptying jar on the way up. This Ethereum Euro was making target. You see that? And look at the reaction after you ran target, a major down reaction. Now we actually think this is going to be relatively very strong compared to Bitcoin now going on, but Bitcoin can sell off and Ethereum can be strong by just selling off less if Bitcoin has a severe sell-off in percentage terms, and gain dominance even on a corrective period or a benign period if Bitcoin is flat and Ethereum goes marginally up, or if Ethereum is flat and Bitcoin is going marginally down. Without anything major happening, that would be an accumulation of dominance readying for the next stage. But look at this, how that target has been made on the ETH euro. It's absolutely beautiful, and we tried to give you a number in dollars for where it'll appear because it's not on the chart, and we said 32321 3231. Let's do that one more time. Calculator. 3231. And we kind of need to know what the euro was, because that was the target. That's 3227. Ah, it's very close enough. What was the euro USD as an exchange rate? And that would have given you where it would have been an indicative target. We need it on all 1.088. So tiny bit worse for the dollar. A tiny bit worse for the dollar because it's been slipping. So times 1.088. 7. Okay, one more number. So 3517 was where it started to become a good place. Now you are actually on ETH still trading a tiny bit above that, I think. And it's this relative strength of Ethereum that's keeping you out of mischief here. In other words, it's one of the better holds right now. So let's go and say goodbye to ETH euro. You saw how that target on the ETH euro coincided with a pullback. Quite a substantial wick dip down. Thankfully, it's so strong it's shaken it off and made a new high. But also that coincidentally coincided with Bitcoin wanting that new all-time high. So we could see all the key events. Add to that the Tether dominance running target. We expected a reaction. Three different. This is not indicator trading, guys, where you reposition different price, same price data, and you apply three different formulas and you think you've got three fresh reasons because you've applied three different formulas to the same price data, and now you're 3 times more convinced. No, not that placebo foolhardiness. We're talking about separate charts with separate data of its own independently. Pattern structures revolving around that. This is why you're going to get a reaction. Tether's just run a target and has been in an absolute spiller in the capitulation phase. You're going to get a small spike of pushback, potentially higher possibility there of conform to HVF method. Ethereum is about to make a target, expect a potential reaction, high pot. Bitcoin sitting, bulking at the all-time high, just running or just missing running and getting the reaction it got. You missed a 10K with leverage smackdown. That's hard. Remember, you sit there holding that and hoping it rallies. Otherwise, you're selling out at the bottom, or you're getting margin calls because you don't know money management. Any one of those things happen when you don't see the possibility. And we gave you the video and we said it in live with you, and I've just shown you some of the small snippets to do with that. So this is why it's so powerful, and this is what you get when you come into the community, and that's why sometimes people of their own volition will put a comment in there and say, I'm really glad I took the program, or this. I am just seeing things more before they happen, and it's not you know for sure, it's on balance of probabilities. 3 aspects insinuating on balance of probabilities there could be a somewhat of a slapdown. And actually it's small beer because it's mostly shaken off, but it could come back down. You know how much stronger you are if you've taken off and now it's about, I can choose my entry again. It's all way less than what it was when I got off. I'll make money over the same 10 grand for a second time instead of bricking it, hoping it doesn't go into a second stage sell-off and destroy my account because I'm still sitting on 50%, 100% leverage and it's eaten most of my equity. You want to reduce the volatility in your own personal equity account. This is how you do it. You keep leverage very, very low, and you use it exclusively at key moments, and you absolutely know when it's safest and smartest to take it off because of potential higher possibility of event risk. That should make sense. I hope it does, because we are trying to help people. This channel has stayed up amongst all the scammers, all the people have been taken down, all of this. We just want to talk real value of learning to people to help them go forward. We've never pumped a coin. We don't do this. We talk mainly about the majors. We value our integrity above everything else, and we are wrong often. as well. So, you'll take it with a pinch of salt. Probabilities are what probabilities are. Anyway, that minor little ranty thing, let's get back onto the USD and see how she blows right now. This is what a very strong token typically goes and does. In fact, I want to choose in my list, otherwise it'll delist it. We go back there. A very strong token actually rallies back more than even required. And this is what you're getting on ETH, which you aren't getting in some of the other tokens. Now, that doesn't mean if Bitcoin rolls over again, you're not going to get another dip. But you can see that if you'd got reduced 50% at 3.5, you would have missed the dip. How low did it go? It went to 3.2. 3.2. Still good not to have visited that. If you're watching a screen on a short time frame, that's an ugly sell-off to have to sit through. See what I mean? And, if you had to stop there, you had to stop there on any of these upside HVFs that we were benefiting from, they all would have been run by that. Stop losses get run. You need to know where to place them and when not to take the risk of them being run at all and taking them out the system and being back on just investment, that is your long-term hold, and taking your profits. And then you're buying back in low. This is the key element. And it's not all the time. We're largely staying investment long throughout this process. We are not touching the investment. This is that tiny little bit of bonus that you're putting on. Okay, so that's it. But I do still think if Bitcoin rolls over, this could be a margin high. You could come back a little bit, but it might be more calm. We'll see. Maybe a bit of what you ideally want to see for a quick recovery for ETH is actually a bit coming down, and then more basing. And then it does this, super low vol, and then you can go and do Skater Boys half pipe, boom, boom, bosh, and break the high, and you end up almost with a handle of a cup or a cup of itself that is going on with a volatility ironing out. Okay, so there we go. That's Ethereum. Why Ethereum to overperform potentially? The news headline, Sniper says, higher than likely possibility that in an amazing turn of events, Ethereum will outperform most other tokens, including some of the microcaps. Of course, there'll be some of the tiny ones that'll 10x in a week, but most of the majority of the market cap in a Bitcoin dominance event breakout that could see the second stage of the bull market, where the second biggest token by market cap and the single largest alt consistently, not every day, most days, and over 7-day periods and weeks and months, is one of the biggest movers, particularly when a risk-adjusted basis. It has lower pull down in terms of its return for volatility. It's risk adjusted. While others might fall harder and do slightly higher top line numbers, their risk adjusted reward for all those hectic dips that suddenly come out of the blue will not equal that which you would get on Ethereum as a token going forward. That is our call. That is our call. That is our call. Let's see how we do. Could be wrong. Non-advisory. We just talk in our book and saying how we're seeing the world. Hope that was useful. Catch you again soon. Thanks for watching. Thank you for the kind comments. And we'll see you again next time. All the best for now.